the holiday season, well, you could argue it's upon us. A lot of people say it's holidays throughout the year as well. But all of this, increased air traffic, so on and so forth, is all great news for baggage makers. Remember, we had a couple of very eminent investors come in and say there are multiple reasons that are leading to this demand for backpacks and trolleys rising. So how much has the country's largest organized player managed to cash in on this demand? And how does it look like, not just really for the next 1 or 2 quarters, but a 4 or 5 year out scenario? Let's ask that to Chairman Mr. Dilip Piramal, who joins us right now on the show. Frankly, if you look at the stock and the screen, it seems to be popping with buying interest almost every single day. Mr. Piramal, thank you so much for taking the time out and speaking with us. Most people, when they talk about the short-term, cite factors like the shift from unorganized to organized, the increased air travel. Somebody even cited the barats and the need for branded baggage as opposed to the erstwhile traditional practices as a big reason as well. But all of these, I mean, almost everybody says that these are reasons that we know. What's new in that? My question to you is, do you believe these reasons hold true for an industry like yours, not just for the next 3 to 6 months, but arguably for the next 3 to 5 years or maybe more?
Yes, absolutely. These are the main drivers of our industry. Like travel is the main driver. And then, of course, weddings is another big factor. And in this first quarter, April, May, June is our best quarter because it's peak holiday season, summer vacations everywhere. And it's also the peak wedding season. As you know, in India, we have weddings according to auspicious days. And April, May, June are the main, the strongest wedding season dates, followed by those after Diwali. So this first quarter is our strongest quarter. We used to do nearly at one time 35 to 40% of our annual business. Of course, now the spread has become more even, which is very good for us. But even then, we do about nearly 1/3 of our business in the first quarter.
Now, I shift back, and I know you would be in a silent period, so you can't talk all numbers specifics, but even if you can just get a flavor for the sake of this discussion, the volume growth at the end of Q3 was, I think, 18%. And back then in the investor call, if I'm not wrong, you had mentioned that this was largely due to the shift from the unorganized to the organized. I'm guessing that play is still on, and therefore, the volume growth numbers would probably still have continued to look robust into quarter 4, may look good even in FY19. Would that be a reasonable estimate to make?
No, I won't give you any figures,
Sure.
But I would like to say that what I mentioned for the third quarter is that the volume growth is not entirely based on this, but the increase. We had about 18% growth in the third quarter. And I said that this growth rate has grown from 10 to 18%. And that this increase, I feel, has come from the unorganized sector. And because this has happened in all the organized sector companies. So I said this higher rate, this spike in the rate of growth is because of that we have got some market share from the unorganized sector.
I would reckon that tailwind continues, Mr. Piramal, into the quarters ahead, at least safely for the first 3 quarters of, or maybe the remaining 3 quarters of calendar year?
Yes.
Okay, it does.
Yes, the trend is continuing.
Okay.
Yeah, it's very good.
But the interesting bit, Mr. Piramal, is that you are also gaining market share, not just from the unorganized players, but from peers or competitors such as Samsonite and American Tourister as well.
Yes, that is also true. In fact, at this time, I would say that the conditions in the economy in India have never been better for us. If I see the last 30 years, 40 years, and when I say the economy, particularly sectors like aviation and transport, including railway and road transport, there has been a lot of improvement there also. So the overall economic environment has been very good. And within that, our own competitive position has been very strong. So we are benefiting from both of these aspects.
Well, that maybe that's showing in the way people are wanting to go out and own the stock of VIP as well. We're not getting into a stock specific discussion though out here. 2 or 3 business questions, Mr. Piramal. One is, I remember a few years ago when we used to talk to you, the conversations used to be around the quantum of imports that companies in India are getting in from China. Are you seeing a shift out there? Because as I read, your own manufacturing facility in Bangladesh, for example, if I'm not wrong, is running at full capacity, and you've incurred some capex to increase the capacity out there as well. Is localized manufacturing from a company like you is also increasing in a big way?
Yes, absolutely. China is getting quite expensive, and we have increased our Indian region sourcing. When I say Indian region, I include Bangladesh, but in India specifically also our sourcing has gone up substantially, and we make all our hard luggage, and the worldwide trend is now more towards hard luggage, so that manufacturing is also increasing, our own manufacturing. And I think we're getting back to becoming a manufacturing company. As you might recollect that prior to the year 2000, consumer goods import was absolutely banned in India. I mean, nobody could import any finished consumer goods. So all of us were manufacturers. You had to be a manufacturer if you wanted to sell any consumer product in India. And it is only after the year 2000, that India had joined the WTO earlier, I think in 1995. And there was a 5-year waiting period, after which we allowed import of consumer goods. And over the years, the import duties also came down substantially. So a lot of consumer goods started being imported from China. And in fact, our own manufacturing environment was so adverse, especially in these low-end goods where the labor input is very high. That is the irony, that in India, the labor-intensive jobs were being exported to China, and we were becoming good in manufacturing in areas like automobiles and all, which is very high-tech stuff and which cannot employ too many people. But the real employment-generating industries were all being pushed out to China, and mainly to China. And that is what happened with us also. So now that China is becoming a middle-income country, their wages also have gone up, their young population is depleting. So we are increasing production in India.
Interesting. Is that margin accretive too? And if you can give us some more flavor, because again, correct me if I'm wrong, but you had mentioned at the end of Q3 that had it not been for the GST impact, your gross margin numbers wouldn't have looked the way they looked. How has the scene been in Q4, and what do you expect broadly the range or the outlook to look like on the operational front for FY19?
Yes, things are quite good, but the costs are going up a little bit, so the gross margins, let us say how much, whether we decide to pass them on or not. Also, what I was also meaning that now when we report our sales, we do not have the GST figures. They are minus the GST figures. So the numerator goes down. So as a result of that, the gross margins go up by nearly 2%. I mean, it's the same thing. The absolute figures are the same, but without the GST, the sales figures are a bit small. They're less by 15%. So because of that, the gross margins automatically go up by about 1.5%.
Okay. Last couple of questions, Mr. Piramal, and again, take on board the point that you really can't talk numbers, but a slightly bigger picture scenario, if unorganized is still 50%, and GST anyways is a natural aid for the trade to move from unorganized to organized, add to that the fact that the industry might be growing, and you would have a better sense of what rate the industry is growing at as, how far out a visibility for growth sitting where we are do you have for VIP or for the industry at large?
Well, I think growth is very good And there is no sense in speculating on the numbers, whether it is 15%, 10% or 20%. Right now it's in the region of 15 to 20%. And I see all this increasing. It's not only for the luggage industry, it's for all consumer goods industries. Except in the FMCG, where the penetration is already very high. The growth rate might not be so high. It'll be sort of more around 10%. But in all these discretionary item industries, the growth rate will be in the region of 20%. I mean, if aviation can grow at 21 or 22%, I think air conditioning business is growing also at 20%. So all these discretionary goods will definitely have very high rate growth, and I think it's difficult to say when that will peter out. If there are some local incidents or there will be some sporadic times when industry doesn't do well, but I think on the long-term outlook for it, it's the long-term outlook for India, if we follow good policies. I think India is one of the poorest countries in the world yet. We are in the bottom quartile in the world. So we have a lot way to go up. And we have a young population, hard-working population. And you see, what has also happened now is that because we are amongst the poorest countries in the world, and China has become a middle-income country, all the low-end jobs will move out of China, and they will have to come to India. Because where else are there more than 100 billion people, 100 crore people? So I think the outlook for India is very good.